Hi guys, so this video I want to show you my entry from yesterday and why I stopped trading trend lines and chart patterns. If you have a look here yesterday, London session, we had a push here. We had a push from here to here and a pullback and another push. This is what I used to trade in a couple of months ago. I used to trade trend lines like this and chart patterns, and I used to love them because I used to draw them beautifully. As you can see here, we have a traditional flag. The flag goes like this: impulse, correction, impulse. So this is what we learn in chart pattern trading. I do not talk down about trading chart patterns or trend lines. This is just from my findings and from my from choosing what I'm comfortable with. I used to trade like this and I would always get stopped out. So after changing my strategy, I then understood why I was getting stopped out, and then I just changed the way I trade. So now I trade the opposite of what the chart pattern traders usually do. By the times these chart patterns would play out, but I wouldn't know why I took a loss here. As you can see, this is an impulse, and this is a correction. This is your typical first touch. This is your typical second touch, and that's your third touch where you sell. And if you go on lower time frame, I'm sure you'd find entry confirmation of candlestick chart patterns like morning stars, engulfing candle. You would get a confirmation somewhere there. Let me have a look. As you can see, you have a rejection candle there, which could be an entry confirmation. On M1, what do we have? On M1, we have an engulfing candle. As you can see, this candle engulfs that. So basically, I'll put my entry on the engulfing candle and put my stop loss above there, and I'll get stopped out. So this is how I used to trade. Okay, so let's look at how I took the trade instead. Okay, so yesterday I was looking at this range from here to here. This is the range I was looking at. Okay, and then Asia, we have our run-on liquidity here. Okay, so our buy side liquidity has been taken, so that's why I put this one. That's the range I'm working on. Okay, that's my QM, and this is my low. Okay, so with this now, I looked at this as my liquidity on the previous session, which was a Monday. Yeah, it was a Monday. It took it. So all internal liquidity has been taken here, and price broke structure. Okay. After price took structure, I was looking for longs in here. As you can see, we don't have internal range liquidity, so price was supposed to generate the internal range liquidity. But then what happened? It took it. It made that low a fairly swing to take the liquidity. Then after Asia opened, this is what we have. After Asia opened, we have our confirmation after a break of structure here. Okay, so after this break of structure, I confirm a low. So we have a strong low here. So that's the range I'm dealing with. And as you can see, when price broke this low, this high to confirm this low, when price broke here, it made a strong low. Okay, it made a strong low. All right, so this is a range from here to here, and then price pulled back. If you watch my market structure video, this is what I was explaining. Then it pulled back, then it broke structure like that. Okay, Then this low didn't take any internal range liquidity. I was working with this low. So we have two legs in this scenario. We have this leg and we have this leg. Okay, so price can respect the smaller range, or price can invalidate the smaller range and come and mitigate something on the bigger range. Like that. And use that as liquidity. Okay. Use that as liquidity. Alright. So what do we have here? We have a strong low. If we have a strong low, price is supposed to respect all strong lows. So what did it do? It gave us liquidity here. After it gave us a BOS, it gave us a BOS again, which is a T1 setup. So our entry is on the closest POI to liquidity, which is either this order block or imbalance fill price action. You can take the body if you want, but I took the wick, okay, the imbalance fill price action. So your stop loss can be just here. That's your entry and your very tight stop loss. But for me, I don't usually like these stop losses. Why? Because in this range, we still have this as internal range liquidity. Okay? So what can happen here? Price can then come to this unmitigated wick. So it can drop, collect all these stop losses, then go. So I usually like to put my safe stops. So my entry was here. Okay? Then my POI was from here to the bottom, like that. Okay, and my stop loss was just below. I think 3.5 or 3.6, I don't remember what I used. 3.5. Then I targeted the external range liquidity of the range I was talking about, this one. So this pullback was complete. After a pullback, we have an impulse. So my external range liquidity was here. That was my target. All right. So that was a beautiful trade, and it gave us 6R, I think. Yeah, just there is where I exited, 6R. So I hope you understand. If you have any questions, please comment below, then we can take it from there. Otherwise, thank you guys for watching.